Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is February 4th, 2022, and today is Friday morning. So looking at the highlights of the day, Facebook gapping down $100 after missing revenue targets. Now looking at the major economic events of the day, 3:30 South African time. Out of the United States, we have non-farm payroll coming out. That's the most important number of the month, so you do want to know what's coming out. Now looking at the various markets, a lot of activity in the euro, ripping up higher after yesterday's ECB rate statement. Australian dollar falters, though, on the downside. Now, looking at the indices, the NASDAQ and the Dow Jones both lose momentum and sell off, really on the back of Facebook. Now, looking at commodities, gold steady while oil hitting new highs at $90 a barrel. Now, speaking about stocks, the FAANG stocks and Microsoft completely did an about face and sold off quite aggressively after Facebook's missing targets. Now, lastly, looking at Bitcoin trading at slightly higher. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're first looking at a daily chart of the Eur Usd. And look at this uphill battle. I mean, you can't write this stuff up. Look at that V formation. Now we do have resistance here at 114.55, so just be aware of it. Okay, this is really important where we are right now. 14.55 is essential place for us to be. Okay, so on the upside. Now looking at the Australian dollar, it did also rally up, but then made an about face, okay, selling off and faltering here as it's hitting this capitular level. Now looking at the GBP USD, also had a nice rally up as this has been forming this whole week and hitting 136 and then faltering as well. So 136 is a decent number for it to falter. Now jumping in commodities, okay, gold, we're watching it. Okay, so every time it hits support, it bounces off support. This is like the easiest trading in the world. It's trading at 1808, which is almost equidistant to 1828 and 1787. So with that said, okay, we're about 20 points below, 20 points high. So we're really mid-range right here. Not much to do. We're pretty much trading at zero. Because, you know, ultimately, you know, if it's overbought, then we sell it. If it's oversold, then we buy it. And right now it's in the middle. So nothing really much doing here. Now looking at oil, look at this spike, $90.72. This is the first time we've been here in 2000 and since 2020. Since 2020. Okay, if we look at a weekly chart, does it give it to us? No, it won't give it to us. But all right, so it's on the highs, okay, making new highs. So this could even go to $100, $110 at this stage, okay, for all intents and purposes. Remember, high on oil was $180 back then, back in 2000, and I want to say 2009, 2008, right before the major crash. So we have lots of upside to this, okay? However, with that said, I don't think it's going to go that far, but it could definitely take out $100, okay, if it does sustain this $90 range. Now, looking at the indices, looking at the Dow Jones, we sold off quite aggressively yesterday from 35,400 down to 34,949. Okay, now we're bouncing off of that about 200 points. Okay, but all intents and purposes, this has really, you know, lost some of its luster, and this may trade further down. Now looking at the NASDAQ, look at that about face as we did sell off, and we're going to look at the individual stocks, and this is really based on what's happening with Facebook. Look at that gap down. I mean, this is extreme. Okay, this is called a gap down when there's not enough buyers and everybody wants just to get sell and sell and sell and get out of it, right? So they don't lose any more money. This is exactly what happens. Look at that, 323 where we're trading at, and we're at 237. $100 gap down. That's a lot. Okay, that's a hell of a lot. So will it close the gap? Probably not. Okay, these type of moves are extreme and they are vicious. Okay, this could even go down to $100. I mean, at this stage. Now, I'm not professing here because I'm not a prophet, but, you know, speaking technically wise, let's look at it. Okay, we haven't been in this area since 2020. So the markets are making correction now. And this is major because look at the 30-day moving average. We're really correcting that as well. Now, if we do a Fibonacci retracement to it, let's give it a look right there. This is really where we should be bouncing off of, okay? So if we do breach this and we trade lower, we could basically hit $200 a share, okay, for the price of Facebook. Now, looking at the other major stocks, Apple also sold off, lost some of its luster yesterday. Microsoft also sold off, lost some of its luster. So we're at the end of the move. We're at the end of the move upside, okay? We're looking right here at Amazon, excuse me, at 27.83, also below its $3,000 mark, okay, which is really an important level. Now, JP Morgan didn't sell off that much, okay, but it is breaking on the downside, okay? So note, okay, the market is shifting, and it's shifting downwards, okay? So my bias is more downwards than it is upwards right now. So just think about it in terms of that, okay? So the next 3 months going into February, March, April, May are really very important months for the markets, okay? So keep that in mind. Now, lastly, looking at Bitcoin, did get a little bit of a bounce yesterday, 38, and go back to 35, and then go back to 37. It's flat here, okay? All intents and purposes, like gold, it's trading within its upper reach and lower reach, but not breaking higher, not breaking lower. So it's right smack in the middle. So, you know, not much doing here. I mean, if you want to just trade the short range of it between 3,800 and 3,600, you could, okay? Just be careful how much you go in, how much you go out, and make sure to put stop losses there. This is Fred Razak, and I wish everybody a great trading day. Thank you.